Alright guys, welcome back to another video of our channel. And in this video I'm going to be sharing about how you can diversify your portfolio. I will be giving in this video all the strategies that you can use in your diversification to get the maximized result. Right? So without wasting any more time, let's start our today's video. So the first point is, what is portfolio diversification? How you can do it? So the portfolio diversification is a way how you can spread all your investments, all your portfolios, right? So there are different sectors where you can separate or you can spread out your investments, right? There can be FMCG market, FMCG sector, or it can be oil and natural gas sector, or it can be commodity market as well, silver, gold, like this, or it can be government sectors like railway or defense. There are different of sectors where you can spread out your investment to get the maximum result with reducing the risk, right? So for an example, suppose this year railway stocks are underperforming while the FMCG stocks are pumping up, right? So what happens, it will be balancing your portfolio and will reduce the risk of getting lowest return or getting your portfolio into negative, right? So the second point is why it is important, why portfolio diversification is important. Number one that is important is to reduce or to minimize your risk, right? Minimizing the impact of the poor performance of the sectors or the stocks that is added in your portfolio, right? So number second is maximizing returns, spreading or exposuring to multiple growth opportunities. For example, India is now a stage where every sector is now in a pumping mode, where the FMCG sector is growing, where the railway stocks are growing, where the defense sectors are growing, everywhere the markets are growing. So it will be foolish thing to diversify your portfolio into one or two sectors. Always diversify into all the different parts of the sectors where it can be possible, the chances of the growth are high. Number third is enhance the stability. For example, the FMCG market is quite volatile, and due to this you have a panic of lot seeing your PNL. Daily seeing your PNL is like a patience lose, or you have a FOMO to see your PNL every day. So if you have one stock in your portfolio and it daily jumps like 1%, 10%, 20%, and the next day it again down 10%, 15% like this, so your FOMO and your patience will lose day by day. It will happen if the portfolio is diverted into two sectors or the different or 4-5 sectors. Then what will happen is you will be mentally stable. You know that your portfolio is diversified into different sectors. It will remain your mental health constant, right, or stable. So the third point is diversification by sectors. The first thing I have told only the sector wise diversification, right? So the core sectors that are there in the market are the essential healthcare sector, it can be technology sector, or can be the consumer goods, or it can be the FMCG market, right? So the second is cyclical sectors, right? It can be real estate, it can be automotive, or it can be an energy sector that are growing well, that are pumping and performing well in the past also, and it have the potential growth opportunities in future also. So these are all the cyclical sectors. And the third is defensive sector, like considers like FMCG market, it can be also, or it can be a government defense sector like the Hindustan Aeronautics, BHEL, BEL, Bharat Electronics. These are all the stocks, these are all the way where you can diversify your portfolio. Like this cannot go down at the end this have to be bought, right? So the number 4 is the common mistakes to avoid before diversification. Like the number one thing is the over diversification. Many people diversify a lot of sector into, suppose they have a small fund, for an example 50,000, or it can be a 40,000, and they will diversify into 5 or 6 sectors, and this will ultimately end up your maximizing result. For example, in your 40,000 portfolio you have invested into 4-5 sectors, right? What will happen is, for example, if 2 sectors underperforms and 3 pumps or 3 performs well, what will happen, it will do average. and will come to a break-even point, and you will be facing a loss, even not loss, not also you will not face the more profit, right? So to gain the more profit, you should diversify, but do not diversify in a way that it is diversifying in a like huge exposure mode, right? Second is ignoring correlation. Suppose for an example, you put in your portfolio stocks that are correlated, right? For example, RVNL and Titagar Railways, right? These are the two stocks that are correlated, like these are the two stocks that are two railway stocks, right? Number third is neglecting rebalancing. It means that many people do, they will diversify into 4 or 5 stocks and it will be diversified for long, for until their SIP is going or until a decade. This is not. Every year you should alternate your stocks or your sectors, because every year every sector will not perform well, or every year every sector will not underperform, right? So to gain the maximum potential, always adjust your portfolio, allocate every sectors, allocate every stocks where they are possibly fit. So this is it. The time for now conclusion is, now well diversified portfolio is the cornerstone of a successful investment strategy, and so it reduces ultimately the risk and also enhances the stability, and that ultimately helps you to achieve the more financial goals in your life. Remember to review and rebalance your portfolio regularly, right? It will adjust and it will make your mental stability also well. So if this video helped you understand diversification better, don't forget to like, share and subscribe to Daily Dolphins for more investment tips. So let's build wealth wisely together.